All right, make it 8 in a row for the Dow, closing at another record high on Friday. But how long will it last?
Yeah, Karl Eggerss, president and CEO of Eggerss Capital Management, is here this Sunday morning to talk to us about that. And Karl, to what do you really attribute this big surge in the Dow?
You know, everybody gives all these reasons, political. There's obviously a ton of risks out there, geopolitical risks. At the end of the day, the stock market's about profits of companies, right? If companies' profits are going up and they're making more money, the stock market will go up with it. And that's exactly what we've seen. So the question is, how long will it last, right?
Yeah.
And really, I think one problem that I think most of the viewers have is they look at the stock market and they think it's like a circle where if it goes up, it has to come back down. You know, you go back the last 100 years, you go through big cycles, big downdrafts, but typically the stock market is going to go up over the long run. The problem is most people that are in retirement don't always have the long run, right? So it definitely need to take the risk into consideration. But right now, profits are going up, stock market's going up.
And has there ever been such a drastic, really 10-year period like this? Yeah,
in fact, the 10-year period we've had is actually a lot smaller than the 10-year period we had back in the 90s where the stock market went up fivefold. So wow. We could go on longer and higher than what we've seen. And really, I think what investors should look for to warn them that something bad is coming is, are all your friends bragging about how much money they're making in the stock market? Not right now, because you go back to the financial crisis and prior to that in the dot-com bubble, that's when everybody was saying, can I get money out of my house, do a second mortgage to go put it in the stock market? We're not seeing that right now because people have been so burned the last 15, 20 years in the stock market, so they're very scared. That's actually a good thing. That means those people don't have money in the market yet, and they're still to be convinced to put it in. So once we start hearing people say, I want to get in on this hot stock, I need to buy more, I want to leverage my house, that's when I would be worried. And maybe we're at the beginnings of that, but I don't think we're there just yet.
So the name of the game is still to be diversified and still to be a long-time player, not necessarily a short-term player.
Yes.
And of course, there are going to be these fluctuations. I once had an advisor tell me, even if you got in before the Depression in the 1920s and were a long-term player, you still would have made significant money.
Yeah, it's interesting. If you go back and look, that's a great point, because any 20-year period going all the way back to 1900 has never lost money in the stock market. And so for most people, even if you're retired, you have some money that is 20-year money, right? If you're retired at 65, your life expectancy is longer than 20 years. So that means a portion of your money can be in the stock market. It can go through this fluctuation.
Right.
Keep in mind, too, that the Dow Jones, everybody's talking about the Dow Jones 22,000. It's only 30 companies. So a better representation is to look at 500 companies, 5,000 companies, not just 30, because the way they calculate it is a little misleading sometimes. So be careful of that. But Dow 22,000, big round number, it's great, but look at the broader market.
Absolutely. And I've actually been told several times, a lot of folks make it political. In the short term, politics could sway it. But would you agree, if you're a long-term player, then politics actually has less of an influence?
Absolutely. I mean, we look at, whether you agree with the previous president or the current president, the stock market went up and down under the previous president. Right. It's going up and down under this president, and it will continue to do so. So again, profits of the companies, much more important than politics. Some of these short-term events do cause volatility in the short term. Long term, it's profits by the pound.
And last question for you, Karl. Can you give us a stock to watch?
One that's interesting, we actually own it for our aggressive clients, is Under Armour. Really? Everybody knows this company. They've had a lot of struggles in the last couple of years, so this is the time to at least look at them. Again, when we mention a stock, be careful not to go buy it right now. It's just a study. But if you look at this company, they've kind of made it as a company. They have Jordan Spieth as one of their sponsors. They also have Steph Curry with new shoes coming out. They're trying to get Lonzo Ball, the new up-and-coming star in the NBA. If they can get all those and they can turn things around, this is a company that could, again, rival Nike. But Nike is so much further ahead than where they are. But I think Under Armour is a really interesting stock to watch. Don't buy it just yet. Go watch it.
Yeah. Hey, when you say watch, usually when someone gives a stock tip, I say you could just ignore it. But when you give a stock tip, you definitely have to watch it. You have to watch it.
Thank you.
Insightful information. Thank you, Karl, so much for being here.
Thanks, Jared.